One USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Hey everyone, with Budget 2025 right around the corner, there is one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first. Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding
Persistent Systems is one to track on account of the earnings, and it has reported an inline set of numbers, at least with consensus estimates. We'll find out from the management whether it met their own expectations. Joining me now is Vineet Teredesai, who's the Chief Financial Officer of the company. Vineet, thanks so much for taking the time, and congratulations on what looks to be a very good set of numbers. You've delivered on your promise to expand margins. It's coming at 14.9%. I'll come to that in just a bit. But a lot of people have spoken about execution being the primary factor that has helped you set these numbers up. What would you say?
First of all, thanks for inviting me to your show, and wish all your viewers very, very happy New Year. Yes, this is typically a seasonally weak quarter, and within that, we have been able to deliver 4.3% revenue growth on a reported basis. If you look at it on a constant currency, it has come out at 4.6%. And if I do a little bit of extra maths on it, we had an impact of around 100 basis points on account of furloughs. And let's say you take off the contribution from the inorganic part of around 0.3%. So net, if I want to do an apple-to-apple comparison with last quarter, we actually would have delivered almost 5.2, 5.3% growth. And that, I think so, in this environment, when the business is not that easy, I think so we have delivered well. Our bookings have come out well. The good part, all the three verticals across the 100 million quarterly run rate for us. Operating margins, yes, we had mentioned that our aspiration for the full financial year is to sustain the margins that we have delivered in the last financial year, that is at 14.5%. In first half, we delivered operating margins of 14%. This quarter, we were able to expand it with our cost optimization program and a disciplined execution that went in behind it and take it to 14.9%. At this point of time, we are pretty confident that we'll be able to achieve, not only achieve, probably even exceed, if possible, the margins that we had defined. And that basically sets a good context for the financial year 26. So, if we exit the year with 15% plus on operating margin, that sets a good base for us. And we would like to ensure that as we reach our $2 billion goal by FY27, we have also expanded our margins by 200 to 300 basis points. But more importantly, as we have mentioned in our press release, the more important part that now comes is as you get ready to meet the $2 billion goal, we are also setting ourselves and preparing ourselves for the $5 billion goal by FY 2031.
Okay. Quick yes or no, 15% therefore is, or more than 15% likely in Q4?
That's what we had to get into.
Sure.
We had to meet the 14.5%.
Sure.
And at this point of time, it seems that, we are on track for
Okay. So I do want to ask about a couple of things. One, discretionary spending, what's happening there, what your clients saying. And second, a lot of people in the space talking about healthcare being a little bit of a weak point. What's your own opinion of the space?
So first of all, at this point of time, I would say every vertical goes through its seasonality. So I don't want to read in the trends of one vertical being, healthcare vertical has been doing fantastically well for us. And to that extent, this vertical has, if you look at still on a year-on-year basis, it is still delivering a solid 52% growth. So it's not that, it is for us in any way a lower sort of a spend happening there. Coming to the discretionary, at this point of time, there is definitely a positive mood amongst our customers when we speak to them in terms of the overall environment. But are they opening up the purse strings and are they ready to go and splash their budgets, splash and their spending and start spending? I don't think so. At this point of time, we are seeing that sort of a thing. There are enough opportunities available for us in the current environment itself. So if the environment becomes better, it's only going to benefit us even more further.
So would you say that heading into Q4, you're cautiously optimistic on top line growth and you're more confident about maintaining margins or even improving it?
Yeah, we'll see. I'm not. What I'm saying is the mood is definitely positive. Our bookings that we have done do give us a confidence that Q4 will be equally good. On margins, as I said, our cost optimization and other efficiency programs that we are driving down within the company are pretty much on track. So we do believe that at this point of time for the full year, whatever we had laid down the aspiration as far as growth is concerned, industry leading growth is concerned, we should be there. And as far as our margin trajectory is concerned, we should be there.
Fantastic. Vinny, thanks so much for taking the time for speaking to us on NDTV Profit.
Thank you very much.
Hello and welcome to KYC, a brand new show at NDTV Profit. In this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is deep, comprehensive understanding of the companies that they invest in. Know Your Company is a show designed to give regular investors powerful, actionable insights into fundamentals of a single NSE-listed company every day. And today we have yet another very interesting company soaring, and that's Polycab. Now, this company specifically is one which is engaged in the manufacturing of electrical equipment. It's one of India's largest manufacturers of wires and cables, and it also looks at producing electric fans, LED lighting and luminaries, which many now also have a term for this is fast moving electrical goods as well. So it is in that segment. Of course, along with that, it also makes switches, switchgear and solar products along with a handful of conduits. All in all, the company seems to be on a very strong footing at the moment, given its fundamentals. But before I talk about that, I want to take you through all the factors that we're going to assess Polycab India on in terms of how things have panned for the particular company over the last few years. And what we tend to do is we take up fundamentals and we talk about the income statement, the balance sheet, the cash flow statements and return ratios as well. Besides that, we talk about factors beyond just the financials and take an assessment of what the street is making out and its interest as far as shareholders are concerned. So we talk about shareholding, valuations, and street coverage and the outlook as well. And as usual, we start with how things are fared when it comes to its income statement, its top line, its bottom line, its profitability. And as far as its revenue is concerned, in FY24 it marked revenue growth the overall revenues of around 18,000 crores, which is a significant size. And based on that, we've actually seen the company grow by as much as 27% CAGR over the last 3 years. Similarly, our EBITDA has also grown as much as 31%, with EBITDA margin standing at around 13.8%, at least for FY24. But profitability, consequently, has more or less moved in step with its EBITDA as well as revenue. So it's certainly a very strong show as far as its growth is concerned, and given the kind of size at which Polycab works at, it is significant. Now, so it's going to be a thumbs up as far as its income statement is concerned. Let's move on and talk about the balance sheet. Now, given the fact that it works in a segment where cash flows may not necessarily be very forthcoming, it does seem like they have very steady cash reserves. So if it comes to shareholders' equity,